Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got these bad. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, it's Tuesday, and man, the treasuries are rallying hard here. Well, we haven't. I'm actually like early today. Normally we start at like right when they start, but probably I should do at 6:15. But like I kind of hustled up, and then I didn't actually have to drive the kid today, so I'm here on time. So for the one person that's here on time, thank you very much. Oh, do we have everything? Okay, we have everything set up. Let's go and look at the charts here, folks. Wow. So you can see the S&P 500, in the end, I mean, at the beginning, it was kind of looking a little ugly, but in the end, they were able to dig something out. And I am kind of suspect now that options gamma may cause us to float back up to 4,500. But it will be a slow and choppy road. But I think that the gamma is such that it tries to push us to these two sides of the range. So if they can't stay below 4,200, then they might come back and test the other side of this range. But now when you come over and you look at the treasury, oh, okay. So when I was looking at how much it moved up here, I was like, oh man, but it's not quite to yesterday's high. So that means that we could maybe come in here and sell it in spots. Then we got oil. Oil taking a dive yesterday. It kind of looks like it might want to recover today. Let's see. Natural gas headed up. Gold and silver. Gold and silver got creamed yesterday, coming back to 1900. A little bit of a pressure earlier, but recovering at the moment. And copper still looking weak. And the culprit here, well, we got to come and see Bitcoin. So Bitcoin continues to oscillate back and forth across that 40K range. Like they just absolutely love it. Everybody's sitting over there like, oh, it's below 40K, we need to sell it. And then, oh, it's above 40K, we got to buy it. The bull runs on. Yeah. They're going to have to make up their minds. They're going to have to make up their minds at some point. Hey, and then here's the dollar. And this is the thing that's kind of the wrench in the global macro framework, is that the dollar is at 101.8. Continues to be strong here. So, man, oh man. Now, here in the treasuries, some of this order flow that we're seeing already ahead of the open is a little unusual. And well, okay, they're putting 900s up. They got 1100s down below us. This is all a very, very curious setup going into today. Let's see here. We do have some, well, we don't have anything. Oh, yes, we do. We have U.S. core durable goods at the bottom of the hour. We're looking for a reading of 1% versus a previous reading of negative 2.1%. And core durable goods, we're looking for a reading of spot 6 versus a previous reading of negative spot 6, not pot 6. What even is that? Cool. Well, let's come over here and grab these guys. There's some people in Discord asking about the live stream. So we will put the link in there. You can ask some questions. Man, okay, so the drama overnight. Jeff Bezos. Interesting question. Did the Chinese government just gain a bit of leverage over the town square? Jeff Bezos talking about Twitter. Yeah, I bet he got savaged for that one. Hackers stole $3 million after breaking into the Bored Ape Yacht Club Instagram account. Yeah, that was yesterday. That's an old story. And Nassim Taleb was not happy about Twitter being bought by Elon Musk. He thinks, though, that if you don't silence, he seems to be pro censorship. He thinks, not that it's like, I don't think that his position is like, yes, we don't need free speech in our society. It's harmful. I think his take was that Twitter specifically will not be as useful and will lose viewership with if there's too much misinformation, that the hoity-toity smart people will all leave. That's what his take was. There was a bit of back and forth on that. Fidelity to allow retirement savers to put Bitcoin in 401k accounts? What? For real? Is that allowed? I'm kind of skeptical that that's allowed. Oh, and Tucker Carlson did get unbanned by Twitter. Well. You know what? You know what I hate about this whole thing? I mean, I love that Twitter is going to be a free speech platform. But you know what? I don't love that it's causing me to focus on Twitter. I was never a fan of Twitter. I always hated the whole concept of it. I thought was kind of silly at first. And then when not at first, I mean, like, I thought it was silly, but it was always like, well, if it's popular, I'm going to get on it. So as soon as I knew about Twitter, I was trying to get on it. And I found it incredibly difficult to build an audience there. This was other Twitter accounts, ones that I don't think I have access to anymore. Anyways, yeah, Twitter is an interesting problem. Okay, so here on the open, the initial movement in the Treasury is to the downside, which is not all that surprising. I mean, when they're like pushing one way, it's really common for them to open and push the exact opposite way, just to shake people out and stuff. I don't know. So we'll see where they go. Do see a little bit of correlation, these up moves that we had earlier this morning with the Japanese yen. S&P 500 is looking not too shabby at the moment. Wow, already 8 viewers and 2 likes, guys. You're thank you so much for giving us those likes. Hey, maybe you think we could get back to our old standard 16 likes? We used to 16 was like a lot. That'd be a tough poll for today, but we're likely to get some activity and stuff. So, you got a good trade on the 2-year left? Very curious. There has been some volume over there. I think it's so funny that nobody wants to trade the 5-year. They just trade the 10-year, or they do the 2 10-year spread. Okay, well, makes sense, I guess. There could be some arbitrage opportunities there in the 5-year. I was kind of have laid the groundwork of building a system like that. Okay. So a little bump in the road here at 120.015. IAEA director, radiation level at Chernobyl reactor abnormal, I bet. Probably because, well, at the reactor itself. I don't know. I'm sure that having all those soldiers up there kick up some radioactive dust, though. You really shouldn't be messing with it. Well, nobody's traded over here. Did my 2-year must not be on the same session because it did not reset the volume like these other ones did. Can I ask your opinion about funded trading accounts? So I have at least 2 videos on funded trading accounts, or I can go into more detail. But my opinion is that generally speaking, with the advent of micro treasury futures, especially, and even to some extent the ES micro futures, although if you start a $500 account with micro futures with micro ES, that's you're probably over leveraged. But over here, you can put $500 on the 10-year and trade for like a year on that, right? So I don't really see a point to funded trader accounts. Like the main driver behind the funded trader accounts was because most people just did not have the money to trade futures, right? But the accounts were not really giving you all that much leverage anyways. So yeah, I mean, there was problems with them anyways, but you just realize the thing that I don't think people realize when they sign up for those is that the risk parameters that they are giving you are extremely aggressive. Like it is extremely unlikely that you would be able to hit their targets every month. You know, like the amount that they want you to make to pass a combine. If you're making that every month, with like their regular account, you're over leveraged. You're trading something that's likely to blow up at some point. And so essentially the program kind of pushes you into blowing up and taking overly aggressive strategies. So, but if that's what you want to do, you know, if you're all about YOLO and cash out as much as you can when it's working, then go for it. And I would say it's something that everybody does at least once. Why would you want to go back to that crime scene? Yeah. I mean, I should probably take a different stance, right? Like I did a video with you know, we did a sponsored video for one of them. And you know, it was an okay video, but you know, if you push the combines, not only can you make a lot of money from the affiliate links, but you know, it's nice to kind of have those guys on your side and stuff. And I think that people generally are more interested in the combines, but I'm hoping that over time that will change because right now I just don't see the point of them. For me, it's not makes sense. You know, like here I'm trading micros. On a good month, I might make $500. You know, like you're not hitting their profit targets with that, even if I scaled it up. Maybe I would hit it. I guess if I was trading ZN one contract this past month, probably would have hit it. Not a problem. I have more detailed video. Okay, you got to realize I went through the whole thing, right? Like when I started the channel, my thinking was this channel can be my journey to passing a combine. And I did it and screwed up at the beginning so many times, and I gave up. I said, "Oh, you know what? The real problem here is not me. The problem is the performance numbers that they're trying to make me hit." And when I stopped doing that and I started trading my own account, I would traded so much better, and the performance was better. I mean, I wasn't making as much, yeah, but the performance was better. Instead of blowing up like every month, there was like a blow up every 6 months or something. And now with micros, I'm even lower leveraged, and I've had some bad moments, but then we recover them and we're okay. And we're at least we're able to just keep trading the live account, which is really really nice. There you go. A job funds my account, my money no one listens to. Yeah, there you go. I really would like to, though, at some point transition into like running a CTA fund. Okay, so they're polling here for the news. Okay, so durable goods. It looks like it's better than expected. Core durable goods, one spot one versus an expected spot six. I have to say, if you're gonna trade futures, you need to have a source of income already. I think that's one of the problems. It's really quite a conundrum. Is that a lot of people are attracted to futures because of the low barrier to entry. Like you have to buy the software and all of those sorts of things, but you don't have to have like $20,000 sitting around to even play. Like with stocks, you have to get around the day trader rule, and then there's the wash trading rules and all that nonsense, right? So futures kind of become attractive because of that. But the reality is that even though you can trade with a super super tiny account, when you do that, you're likely to just blow it up really quickly, right? Futures are in the end an advanced instrument that are very very difficult to make money with. But there, on the other hand, if your intention really is, your passion really is trading, it's the best place to start, because then you really understand what's going on. Especially you watch order flow, you'll really understand what's going on. I kind of wanted to get involved in a trade here in the 10-year, but the liquidity and everything was such that I just wasn't really going to be able to take a position. But there still appears to be some desire to be long the treasuries here. I suppose if I come over here on our sim accounts, we could take one there. Yeah. Catching the edge. Oh, no, that's not the way that you want it to go. No, no, no. Down 2 ticks. I'll put some liquidity up there anyways. No, we can't be 666 in line. That's not okay. I'm not being superstitious. It's just I'm concerned about the YouTube censor. But don't be superstitious. That's bad luck. I can double a small account all day long. I have not figured out how to not give it all back. Yeah. Well, you know that these big firms, then these big commodity trading outfits and stuff, they don't know how to do it either, right? The whole problem, one of the problems that we're getting in the commodity complex is that the volatility is so high that they can't put up very much liquidity anymore, you know? Okay, that's interesting order flow that just come back through. As soon as I took that order, lots of selling came in. Might be enough to make me want to dump this sim trade here. Let's just kind of see what they do here. The one thing I've never been able to figure out, you get big volatility, what do you do? How do you survive that and make money from it? Well, if you have options, you can make money from it. But if you're trading outright futures, there kind of seems to be some limitations. You might be able to make good plays in there, but you're probably going to make some bad plays in there too. And it often ends up being a wash. And my experience has been to just stay out. Only trade it when you're really confident about what's going to happen. Now, coming in today, I was feeling pretty strong, pretty good about seeing some upside action in the treasury. We have seen some buy side order flow, but the order flow that we've been seeing the last minute or so kind of suggests that it might be more complicated than that, huh? Might be more complicated than that. Hmm. The treasuries at the moment seem a little bit discombobulated, though. It's a very disorganized movement. Uncertain where the spreads are going. Oh, by the way, did we fix this? I think we did. I think maybe we did. I would try to make some changes to my spread indicator to try and make it more accurate when it's live data. But I'm not sure if it's actually working. I think yesterday it wasn't working because when the chart was not active, it wasn't doing the right thing. But so I changed that so that it's just always there and active. And now it's doing something, but I'm not 100% sure what it's doing the right thing. I think we got to give it like the whole session and then we'll look at that chart and see what we get. The longer one stays at the table, the likelihood you will give it back. Yeah. Well, what does that really all suggest, though, right? Suggests that there's maybe not actually edge to what you're doing. That it's just gambling, right? And you know what? A lot of what people do in futures trading really is just gambling. That's my pet peeve, right? I don't know. I don't know how to present it. I feel like that people don't want to hear it. They get tired of it. Maybe they just don't want to believe it. I don't know, but you can make a lot of money simply by taking on excessive risk. And the way that the stats work is you can look really good for a while, but then you will give it back very, very quickly. That's what tends to happen. So, because ultimately what you are at that point is a noise trader. I really think, ooh, what's going on here? Well, I'm not seeing any. Okay. Okay, so I'm hearing German foreign minister says that an oil embargo of Russia is now feasible, is what I'm hearing. That might be why the S&P 500 took a dump. I am seeing oil move a little bit off of that. I'm a little tepid on it. Okay, cool. That trade did not work out the way that it should have at all, and really only made money on it because I added risk onto it. But yeah. Conda retweeted by Bitfinex. When a member of the crypto elite admits crypto is a Ponzi scheme, they're not confessing, They're bragging. Normalizing securities fraud has never been this easy, and they're gloating. Seth, why is it that the notes move well just before the NYSE open? Are you talking about like that there's can be movement just ahead of the NYSE open? Well, so the way that I would think about it is who's trading it, right? Right at the very beginning and before the open, you've got all of the European traders are the ones that are trading it, right? The European traders trade it, and then the market makers come in, guys like us. Where I guess we're considered market makers, even though the way we trade is really more of a speculator. Okay, and then you've got the people that want to trade the economic news. Okay, then something around at the top of the hour, so we're not there yet, but at the top of the hour, what happens is that's when the equity traders step in, right? That's when equity traders start to maybe they think they know which way it's going to go, and they start to speculate with what's going to happen ahead of the open, right? That's why if you tend to take a trade at 7 o'clock, you'll have a greater chance of catching a little bit of a run, right? And then at 7:30 is when the NYSE opens and the real stock trading begins. So there's going to be even more volume there. And so the people that are trading like right there at that open are more the people that the people that trade in the treasuries, that is the people that trade in the treasuries there right at the ES open are, they're hedging their equity exposure, essentially. Like they're either doing risk parity, or they have to hedge against interest rate risk or something else like that, right? And so that's why you will often see a little bit of movement in the treasury right there when the E-mini starts. Well, I we could have taken, I wouldn't have minded being short at 2.77, but I just wasn't too happy with the market conditions. It's getting better now, but now I kind of have to chase, huh? The problem I see here, though, is that the driver here is equity weakness. The driver appears to be the equity weakness, possibly driven by this German economy minister Habeck saying Russia's oil embargo is now manageable for Germany, suggesting that more economic sanctions for Germany are possibly on the horizon, right? So then if that's news like that, we might get a little bit of a pullback. Let's see. Jack, I love Twitter. Twitter's the closest. You know what I find? Something that I find really shocking was the former founder of Twitter liking that Elon Musk bought it. Yeah. Everything that the left claimed was conservative conspiracy theorizing about Twitter's power is suddenly an existential crisis for life as we know it on the left. Yeah, it really is. Like, all of a sudden, them buying Twitter is like a huge deal. I think that their Twitter is more important than people realize. Yeah, probably. So this yield farming, there's like this big hoopla over there's a guy, forget his name. His name keeps coming up, but I'm like, why does his name keep coming up? But then I can't remember what his name is. Ah, that's so funny. But there's this guy, and he gave a description of yield farming that basically made it sound like a scam with Bloomberg, and it's getting a lot of chatter. So that's what I'm talking about with that. No, I don't think it was Richard Hart. That doesn't sound right. No, it was Sam Bankman. Should we read the thing? I didn't. When I saw it, I was like, I don't really care. I didn't actually read the podcast. Okay. Matt Levine, can you give me an intuitive understanding of farming? I mean, like, to me, farming is like you sell some structured puts and collect premium, but perhaps there's a more sophisticated understanding than that. Looks like they're coming back here. Let me give you a sort of a really toy model of it, which I actually think has a surprising amount of legitimacy for what farming can mean. You know, where do you start? You start with a company that builds a box, and in practice, this box, they probably dress it up to look like life-changing, world-altering protocol that's going to replace all the big banks in 38 days or whatever. Maybe for now, actually, ignore what it does or pretend it does literally nothing. It's just a box. Okay, so that already sounds like a scam. Okay. So what this protocol is it's called Protocol X. It's a box, and you take a token. You can take Ethereum, but you can put it in the box and you take it out of the box. All right, so you put it into the box and you get an IOU for having put it in the box, and then you can redeem that IOU back out for the token. So far, what we've described as the world's dumbest ETF or ADR. No, that sounds like a Ponzi scheme. And then this protocol issues a token. We call it whatever, Token X. And Token X promises that anything cool that happens because of this box is going to ultimately be usable by, governance of holders of the X tokens. They can vote on what to do with any proceeds or any other cool things that happen from this box. And of course, so far, we haven't given a compelling reason for why there ever would be any proceeds from this box. But I don't know, maybe there will be. So that's sort of where you start. And then you say, all right, well, you've got this box and you got X token, and the box protocol declares or maybe votes on chain governance or, something like that, that what they're going to do is they're going to take half of all the X tokens that were reminted, maybe two-thirds will offer X tokens, and they're going to give them away for free to whoever uses the box. So anyone who goes, takes some money, puts in the box each day, they're going to get airdrop, 1% of the X token pro rata amongst everyone who put money in the box. That's for now what X token does. It gets given away to the box people. And now what happens? Well, Token X has some market cap, right? It's probably not zero. Let's say it's, 20 million market. From first principles, it should be zero, but okay. Sure. Okay. Completely reasonable comments. But I mean, that's not quite true. Like when you describe it in this totally cynical way, it sounds like it should be zero, but go on. Describe it this way, you might think, for instance, that in 5 minutes with an internet connection, you should create such a box and such a token, and it should reflect like, it should be worth like $180 or something market cap for what, that effort that you put into it. In the world that we're in, if you do this, everyone's going to be like, ooh, box token, maybe it's cool. If you buy a box token, it's going to appear on Twitter and have 20 million market cap. And of course, one thing that you could do is you could like make the float very low and whatever, maybe there haven't been $20 million that have flowed into it yet. Maybe that's sort of like, is it, mark to market fully diluted valuation or something. But I acknowledge that it's not totally clear that this thing should have market cap, but empirically I claim it would have a market cap. So what he's saying is make the float really low so that anybody that wants to buy it makes the price of the token go up exponentially. That's right. And so obviously already we're sort of hiding some of the magic impact, right? Like some of the magic is in like, how do you get the market cap to start with? But, whatever, we're going to move on from that for a second. So, X tokens are being given out each day. All these sophisticated firms are like, that's interesting. Like if the total amount of money in the box is $100 million, then it's going to yield 16 million this year in X tokens being given out for it. That's a 16% return. That's pretty good. We'll put a little bit in more, right? And maybe that happens until there are $200 million in the box. So, sophisticated traders and or people on crypto Twitter or other sort of similar parties go out and put 200 million in the box collectively, and they start getting these X tokens for it. And now all of a sudden everyone's like, wow, people just decide to put 200 million in the box. Like, this is a pretty cool box, right? Like, this is a valuable box, as demonstrated by all the money that people have apparently decided should be in the box. And who are we to say that they're wrong about that? Like, this is, boxes can be great. Look, I love boxes as much as the next guy. And so what happens now, all of a sudden people are kind of recalibrating, like, well, 20 million, that's it. Like, the market cap for this box, and it's been 48 hours and it already is 200 million, including from like sophisticated players in it. They're like, come on, that's too low. And they look at these ratios, TVL, total value locked in the box, as a ratio market cap of the box's token. And they're like, 10x, that's insane. Dude, that is a Ponzi scheme. It's literally, the yield is only coming from the new investors. Wow, that's crazy. Do you think Elon hated cancel culture so much he had to buy out Twitter to end censorship? I don't think that it was necessarily that. It wasn't cancel culture. It was like, I think that he thinks about society a lot. He's a big thinker, and when they really started banning like conservative people, that I really can't come up with any, like they banned Tucker Carlson. I can't see a legitimate justification for that one. I'm sure that's what prompted it all. But you can just kind of see by how things are going, like, there's a reason, folks, that they care. Man, why is the spread so wide? Is Bezos jealous? He might be. I thought it was really odd. Here's the thing, is that the Twitter's format kind of encourages people to just say whatever is on their mind, which is kind of weird. Because for me, when I make a tweet, I'm thinking of it as like, oh, this is like a big deal. I should be able to, I'm only tweeting this because I think people will really like it and I'll get more followers, and I have to think a lot about what content I'm actually going to put on there. Even though I think that probably what you're supposed to do is just tweet as much as possible. So maybe that's what Jeff Bezos was doing. Maybe it was a little impulsive of a thing, because he kind of did damage control afterwards. He was like, well, but maybe Elon is really good at dealing with those problems. It's kind of what he said. What is it about that price that the market maker doesn't like? Well, I don't see it showing anything significant on the treasury, but for some reason, the micro market maker doesn't like that area. When it ticks up there, he increases the spread. Do you have anything explaining the live time? Because it feels so. Have you watched all of the order flow videos? The order flow videos, which are fairly new, are probably my best explanation for what's going on in the DOM. But I think the thing, or if you feel like there's something missing, probably the reason you might be feeling like that is because I do not recommend that you try and trade purely off of the market data. I think that if hold on, the news quack is talking. We got house price indexes at the top of the hour and stuff. So if there's news, and I know that that news is likely to make X thing happen, that's likely to move the markets in X direction, right? I don't care what the past price action was or what the liquidity looks like or anything like that, right? So reading the DOM is kind of the secondary thing, right? I want to look for things that are going to cause large meta orders to come in the market, basically. Things that are going to cause really big players to have to come in and make moves, right? And then I use the liquidity to sort out how that's going to play out, right? And where are the best places to trade it. So we got a little bit of a liquidity hole at 020, right? So if I was my best, if I could get at the lower end of that liquidity hole, that would be best, right? Because otherwise they're going to kind of oscillate in that area. Right now, it looks like we may be, they're not able to get back into that liquidity hole anymore. The pressure is higher, right? I also can just kind of read from the market makers that there's something about that area that they think that they have to account extra. It's consolidating now that that big order is there, but before that they were widening the spread in that area. So it was like they were concerned about the probability of some informed trading coming into that area for some reason. Or maybe they were just holding it because they wanted to make it move up more easily. I don't know. That is a big order chasing it. That is not one that you see. So a big order like that, we haven't seen spoofs like that in a while. So I shouldn't call it spoofs. So I haven't seen large orders like that in a while. I have never seen a large order be that active. That is highly unusual. But you notice though that I took the trade before I did that, right? So why did I take that trade? Well, because I expected them to buy today. I think that the pressure until the FOMC meeting is up. And I know just kind of based on the options and everything else that's going on that they're kind of vulnerable to short covering rally, and the trend has been up. So from the very get-go, I was looking for the right opportunity to go long, right? And then I knew that there was a liquidity hole in this area down here. So when they had to move up and they pulled back and they didn't move back into the liquidity hole, that was when I knew that, like, okay, this is probably the best that I'm going to get. So I got into that one. Yen futures on fire. Yeah, I guess that's good. I'm trying to use your info from the Blackboard video to scalp Bitcoin, but I can't get it to work. Very hard for me to read. Great video, made things. What was the Blackboard video? That was the one about risk reward and everything, though, right? That's a little bit different. The ones that I think have the most valuable information for scalping is the order flow videos, because especially the last one where I talk about the stylized behavior of markets, because that explains the actual empirical behaviors that markets exhibit. And I'm not saying that you can just like trade those and there's some pattern that you can make money off of. But if you really understand how those work, it can help you optimize your entries, right? Because when this moved up, like let's think about if we only had a chart. Here's our chart. Okay. Where's my pen? Excuse me. I need to keep an eye on it here. Well, we're yapping, but okay. We moved. Okay, so we knew just going into this that the trend is up. Okay. That's just from volume. Now, why? Why is the trend up? Do we have a fundamental reason to think that the trend should be up? Actually, we do. because they've been like crazy short and are kind of overdone it and are vulnerable to short covering rallies. Okay. Now we did all of this area right here, right? We didn't get involved because the market action was a little bit discombobulated, right? I didn't like it. I didn't like the way that the liquidity was looking. I didn't like the spread that they were giving me, etc., etc., etc. And then they made this move right here, right? Okay. So everywhere along that, what am I thinking? Oh man, I should have been long, right? Should have been long. But I don't want to buy it at the high. Why is that? Well, come back and look at the chart. I mean, you can see it now because it's volume profile. I don't want to say use volume profile. Why did that happen? Okay. A lot of volume traded there because it spent a lot of time at those prices. Okay. There was a liquidity hole there. You could see it. They weren't putting up very much liquidity at any one time, but it stayed there for a long time. Okay. Then I come back. We get a pullback. So I'm already thinking, okay, I can take it here. But we get a pullback and it comes right to that zone. It can't get through it, right? Can't get through it. So what does that mean? The liquidity hole isn't relevant anymore. It's filled in and there's people are buying it above that. So that's why I took it where I did. And then on top of that, somebody was just like bidding one contract there. I was like, well, I'll take it then. I'll take it then. That's how I made that trade, right? But do you see how, I know it sounds really complicated, but once you start going through it, it actually becomes very, very simple. I already think I know what's going to happen just from the market sentiment and the fundamentals and what news is going on today and all of these other things. I have an idea of what direction I think they're going to move it already, right? And then I'm just using the liquidity to help me determine like what is the best spot and how to time it. How to time it is another part, is that I kind of know times at which it might be better to take a trade based on how long it takes the liquidity to recover. Right? That's how I do it. So it's going to seem like, because I don't come in and I say, okay, when you see this pattern on the chart, and then here's where you want to take your trade and this and that, right? I don't give you like exact setups because every day it's different, right? But I am giving you the information that you need to know to be able to read the liquidity yourself and make those kinds of determinations yourself, right? Now, that's not going to guarantee you success. I wish it was that simple, but even with all of that, futures trading is going to be really hard. And what's the biggest flaw in all of that is that you really have to actually know which way it's going to go. If you're wrong about which way it's going to go, it can be terrible for you, right? By the way, the Case-Shiller 20 year over year was 20.2 versus expected 19.2. And the price index was 2.1 versus 1.5, which is higher than expected, but not excessively so. So I think that it kind of turned into all right, well, it doesn't matter. Let's just move on. They started buying. But there was a big, that big order there, that was a little concerning. But I was already in a trade and it was kind of trying to push it up. So I was okay with it. I have never seen a large order come in and be that active, though. That was something else. I mean, not in the treasury. Great explanation. Thanks. I really appreciate it. I'm glad I helped. Right? I need to do a better job, Maddie, to be honest. I'm not sure what it is. Maybe I need to have a video that is just like, here's my strategy. Here's how I trade. I don't know. But really what I'm doing is I'm just trying to use the information that I know is true, right? Because there's a lot of people that come out and they say, okay, when it crosses the 10-minute moving average, then you want to enter here and this and that. And it's like, well, okay, but can you prove that that's a thing? Well, a setup like that, you can backtest really easy. And if you backtest it, you're probably going to find that it doesn't work, right? And almost all of the backtestable setups that I've ever seen don't work very well. The more complicated it is to program, I generally speaking, the more difficult it is to automate, the more likely that it is to actually work from what I've found. You can probably go too far with that, but so what I'm doing instead is I'm kind of taking a little bit more of an amorphous discretionary approach to it, right? I know what the market position is like. That's a provable thing, right? I know there's all of these reports from Nomura and everything else. We know that we've got this period of time where there's going to be no Fed speakers until the Federal Reserve meeting in May, right? These are all things that we know. And then we know things about liquidity. We know that liquidity holes actually are a thing, for instance. Hold on a second. I'm going to close this vent. I need to get like an electronic vent that closes in the morning and opens in the afternoon, because when it's in the morning and the house is on heat, then it gets too hot in this room. And then in the afternoon, when the air conditioning turns on, then I want the air conditioning in here because this room just tends to get hot anyways. Brussels has warned Elon Musk that Twitter must comply with the EU's new digital rules under his ownership or risk hefty fines or even a ban, setting the stage for a global regulatory battle over the future of the social media platform. Only on the Financial Times. I know that there's a lot of rules for those, but I'm not quite sure how those apply to Twitter. The Digital Services Act forces the likes of Twitter to disclose to regulators how they're tackling content such as disinformation or war propaganda. Gotcha. Well, I think that they'll be more than happy to deal with that sort of thing. Look at that. That's some good, a very aggressive price action in the Treasury. So, interestingly enough, you're not even necessarily seeing flows come through. It just kind of, well, now you are. Now you are, but there's that big bid. While all of this is happening, I'm not really seeing a super strong price movement in the ES either. Oh my gosh! Yesterday I was moving my brother, and somehow during all of that I kind of caught myself in it. Kind of stings. Distracting me here. It looks like we're getting this move up to the highs in the 10-year, right? But the 30-year is kind of hanging back a little bit. That's why over here in the micro we're not back down to 15 yet. Jeez Louise. Well, we've definitely broken like yesterday's highs. We're actually, so starting at 09. Yes, starting at 09 in the 10-year is where we get into single prints from the move on April 14th, which was that Friday. That was the Friday before Easter, right? One where it was like the market's just like really plunged and we're all like, what's going on? Britain urged Ukraine to strike at military facilities in Russia by all means. Oh, geez. Okay. Oh, wow. I have to say, this is really, I mean, I'm not seeing like massive amounts of volume come into it. So it might seem a little more pedestrian than it really is. But there are at times when they're ticking up there that all of a sudden the order flow in the 10-year gets extremely aggressive. So you notice there's only 342 at oh 08, right? But did you notice when they ticked up at oh 07 half, it was almost immediately that 7 were hitting into oh 08. So you're noticing that like when the bids become weak, the market orders to buy are hitting into it quite aggressively because they're afraid they're going to miss it. So there's some real chasing behaviors going on here. I am noticing, so I'm not getting all of my signs, but I am noticing a bit of a liquidity hole here at oh 07. I'm seeing some signs that the pressure is still there and that we could move higher later, but we might have to chill here for a good 30 minutes or so. I would have thought that would have formed more at oh 09, but and they had to come up quite a bit. Looks like ES is looking negative again here. Another thing is that when they tick up, they almost always tick up with 6 to 700, right? It's not enough to hold it bid at oh 07 half, but the 30-year is coming along a little bit better on that tick. So to fill this guy at oh 08, they might have to line up a little bit better. Actually kind of seeing, oh, okay. There was an order there that kind of pulled and then stacked back on at oh 08. They're nibbling at it, but they haven't been able to fill them there at oh 08 yet. Kind of doing the ascending triangle thing. You wouldn't see it in the chart, but they're kind of doing that. Pressure, okay. But they're able to take oh 07 down, huh? Oh, right. Oh 07 is kind of where the hole is, though. Wow. Okay. That kind of looked like they're ramping it, like that they only allowed it to pull back there so that they could smash it back up there and hope that they get more orders at oh 08. sometimes in a situation like this, you would get iceberging at 07.5, right? But you're not actually getting that. Yeah, now you're seeing it like when they take 07 bid or offer, it's only like 200 at first. So the liquidity provider's not as excited to deal with the 07 price. But it looks like that 10-year is reacting more to what the 5 is doing here more than anything. If we'd taken a trade, it probably would have been better to have taken it in the 5-year, right? Hmm. I'm being a little bit more tepid here at 07.5 now. I think that that's just because the liquidity hole is starting to reinforce itself. Like it's now really clear to everyone that that's what's going on here. Henrik Fisher deletes Twitter account after 44 billion buyout by rival Elon Musk announced. That's interesting. Morning, Mahi. I really wonder on the Twitter thing, um, if Elon Musk taking over Twitter kind of dooms it to some extent because uh, there's just going to be a large liberal contingent of people out there that will want nothing to do with it just because it's him, or that will want nothing to do with it because it's a quote free speech platform. That they think that they're amplifying extremists and yada yada yada, right? Could that harm Twitter's user base enough that it ultimately dooms the website? Okay, there's a little bit more of an iceberg going on at 07.5 there. It's really subtle, but they did absorb 1,700 contracts. I wouldn't say that we're quite in the situation where that this is like a high probability setup on the um okay, so well they hit it. They hit it. There was they were kind of hiding, but it did take 2,500 and it didn't tick up. So the guys at 08 got filled at least. Can he fire the board of directors? Well, I'm not even sure what you have a board of directors for anymore if he takes the business private, but could be wrong. I think that you can kind of change the corporate governance around a little bit at that point, right? Because a lot of it having a board of directors is just about, the requirements of being a public company. And he did say that if he took over, that the board isn't going to get any pay, right? I wonder if they start resigning. Hmm. Okay. Well, now and then they stopped through it. That's interesting. I've never seen it play out that way, but I think it makes sense to me that like they came in at '08, they hit the guy and then kind of pulled back, but then when they came back up again, because the guy had already been filled, there wasn't really a whole lot to stop them, and then you had a bit of a stop run, right? Hello there, Michael Shelderu. How are you doing? Feeling good today. We've had a good number of new people come in. I hope you guys find the stream useful. Know that what we're doing here seems awfully complex, and it's not what a lot of people expect from trading at the beginning. But I promise you, we don't just make this stuff up. There's very good research behind what we do. How are you? I'm doing okay. Uh, there, Thomas Nessie. That name actually sounds slightly familiar. Have you been here before, Thomas? We're doing good. We got 10 likes. So I'm really happy about that. If you haven't hit the like button, please do so. It really helps the channel out. What was the Warrior Trading? You want to talk about that again? Yeah, you've been here 2 or 3 times. That's right. So there's action against him by the FTC for deceptive and improper advertising, essentially. So basically, he promised people that if they took his course, that they would become rich and so forth. Hmm. So just want to note here at '09 is, from a volume profile perspective, considered a significant price because it is the single prints from the pre-Easter move. So you will often see some profit taking or odd behavior at those prices. I wouldn't, with what we know about the inelastic nature of markets, really all that matters here is how many orders net we have to buy. It does kind of look to me here like somebody wants to buy a couple tens of thousands of treasury contracts here, and the liquidity is not too good for them to do it. And that's maybe part of why we're seeing the book behave the way that it is today. No, that's not what I do at all. It's not what I do at all. Big order at 085. I'll provide some liquidity there. I feel like the last step to create my edge could be done. What do you think? Well, so here's the thing. There's the big piece. I got to tell you, we know something here on this channel that a lot of people, a lot of really smart top people in the industry don't understand, frankly, and it is quite possibly one of the most important things that we can know about markets. This is the thing that people have been researching and asking about for the last 100 years or whatever. And that is the market efficient? What is the nature of market efficiency? Because it seems efficient. It seems like it's really hard to make money from markets, doesn't it? Seems like it's really hard to make money from markets. And why is that? And so they came up with this theory that the market is efficient, the efficient market hypothesis. And they did all of this work to show that, generally speaking, the market is very efficient. Well, what they've done more recently with recent research is they started to go into why does the market move the way that it is, and what's with all these problems. Because one of the big problems with the efficient market hypothesis was like, okay, so you have a piece of news comes out. They would do these studies where like a piece of news would come out, and then we would determine what should the price be after that piece of news from a front. Like they do it from a stock. They'd be like, okay, here are the new numbers from the stock. Here's what the stock should be worth now. And it was always either short or significantly beyond what that value should be. what's with that? If the market's efficient, how come it doesn't reflect our? Is it because our estimation of fundamental value is just wrong? You know, sometimes it will move. There's no change in fundamentals. That's just noise. I don't know. What's the deal with that? So as they started to go into the data and everything, what they found was that orders have a really extreme effect on price. Like that's the key thing here, is that markets are very inelastic. So if somebody comes in and buys a bunch of treasuries, the impact that they have on price is far more significant than anybody ever realized. Okay. That's just, I don't know. We want to believe that we don't have an effect on the market, right? I think that that's really what it comes down to. But the reality is that even a small amount of orders, even a small group of traders, like retail traders all working together, combining their money together, could have an impact on the market. Okay. And so what that means from a technical analysis perspective is that any kind of statistical inefficiency that you can see in the market that is supposed to be like, consistent and you could trade it all of the time, those get removed from the market really quickly until it basically just looks like noise. But on the other hand, if somebody is coming in and they're like a fund and they're rebalancing, it can move the market really, really strongly. So not only is like the market look like noise, but then whatever you might think you're pulling out of the noise, you're going to get this other move that's like so much bigger than that noise, right? And this other move that could move it really, really far away from what the fundamental value is, right? And so the efficient market hypothesis kind of has it backwards, because like the short weak form efficient market hypothesis is that the market is largely efficient and factors in all available information, but you still might be able to find some minor inefficiencies from noise and following the trend and things like that. But it's really actually, it's the opposite. It's that the market is very technically, statistically efficient, but it's not very informationally efficient, right? I'll say it again. The market is very statistically efficient, but it is not very informationally efficient, or at least it's much more statistically efficient than it is informationally efficient. So what does that mean? That means that my biggest takeaway from that is that trying to factor in fundamental information and more specifically things that could cause orders, right? Because really in the end, orders are what's going to move it. You need to predict future orders. So anything that you might know that could predict future orders, whether that in our case here today, knowing people's positions, knowing the market positioning, right? Knowing what we have on the docket for today and what the sentiment is. These are all things that could predict future orders. Those are, to have a really good system, you're going to want to have those as a part of your trading strategy, which is the opposite of what technical analysis gurus teach, right? They say all you got to do is look for this one pattern, and you just trade this one pattern every time that you see it in this situation, and you should have a positive expectancy. You won't win all the time, but you win like 55% of the time, and over 1,000 trades you make money, right? And then everybody tries to do that, and then they don't make money, and they say, well, you're just not disciplined enough, right? But what do we know? We know that the market's not informationally efficient. So we kind of have to be aware of what those informational efficiencies are. It also means that you could get a move, right? You could get a really strong move one direction, and it could be absolutely nothing. It could be the opposite of what the fundamentals suggest. There could be something about the market that is not factored in for days or weeks before, and then it's going to require something for that to start, for people to start trading on that, for those orders to come in and it start to get factored in, right? So that's the thing that we know that's very different. And, we kind of have a hard time because a lot of people, it's very different from what people want to believe, right? And it's kind of difficult to prove to people because, you kind of have to go through the research and stuff. But we have a bunch of videos about that on this channel. But So we know that markets are not very informationally efficient. So that's, that fundamental information, that's got to be like, that's the cornerstone of the strategy, right? Then there are some behaviors about the order flow and liquidity that are proven that we know exists. Okay. And so we also incorporate those into our strategy. So liquidity holes and the way that the liquidity works. And I talk about that in those videos. It kind of gets a little complicated, but order flow can help you identify some locations. In particular, it can help you identify locations where prices kind of get stuck, right? So if we're stuck at 07, right? Do you want to buy when it's at 08? Well, when we were moving up there, it seemed like we were breaking out, but now we've come back down into that. So that kind of tells you that there is a little bit of gravity there. That's kind of, it's going to take more buy market orders to dig out into new highs than otherwise. So if they're going to keep getting magnetized back up to 07.5, you probably don't want to buy it at 09, right? You would rather buy it below the node. That way, worst case scenario, you at least get that little bit from the edge of the node to the center of it, right? And you can kind of make those kinds of determinations. And you can kind of start to, and this is where it starts to get discretionary, where I can come in and I can say, okay, well, we're getting some buying there at 1876 at 08. Is that enough to push us up to a new high? I think it might be. You could use delta, cumulative delta imbalances that make me 73% of the day, but I feel like understanding the DOM could take me the rest of the way. News don't work that great on crypto is what I feel. Okay, so news and the cryptocurrency market is really complicated for sure. The issue is that the sorts of things, you don't think of it as news, right? Think of it as predictors of order flow. That's what we call them, predictors of order flow. Things that have a very high probability of predicting new orders on a short time frame, right? The cryptocurrency is a little bit different because all of these other markets kind of have these correlations and so forth that are fundamental to what they are, right? Like I know that the Japanese yen and the 10-year treasury are going to be correlated to each other in a certain degree because so many funds from Japan are coming over and buying US treasuries, for instance, right? That's what kind of causes them to be related to each other. Because Federal Reserve policy is based on the labor market, treasuries tend to be correlated to the S&P 500. The S&P 500 moves up, then the 10-year treasury tends to move down. And the yields move up, right? They're like fundamentally connected. In the cryptocurrency market, almost everything about the cryptocurrency market at this point in time is speculative. And so the predictors of order flow just have to be like, okay, is there something happening in the news that is going to alert more people to Bitcoin and make them want to buy today? Is that sort of a thing? Like Elon Musk tweeted about it. Tweeted about my shit coin, right? Well, then there's going to be all these people that didn't know about it previously that are going to come in and go, oh, hey, maybe I want to buy it today, right? Predictors of order flow. That's hard. Very hard in the cryptocurrency market. I honestly, I'm not so sure myself that trying to discretionary trade the cryptocurrency market makes sense at the current time, or at the very least, I think that there are probably better opportunities if that's the way that you want to trade. If you're going to be doing the cryptocurrency market, I think that what I would be doing is I would be trying to automated trade, really thin markets that aren't very well known, provide liquidity using correlation with Bitcoin or something like that. That's what I would be doing if I was in crypto, right? You know, a lot of the things that we know about the order book, those are things that if you're fast enough, you can just straight up just use those and just make money off of those. But you have to be fast, you know. Let's see here. Do you have any videos of basic Ninja Trader scripting, like how to just find a high candle and turn it red or something like that? So I don't have a video that's like going through that specific kind of scenario, but I do have a bunch of Ninja Trader videos, right? So I have one that is like the basic functions, and I have one that is about data structures. That's if you want to do like order flow kinds of things. Okay. That will give you enough that you can go and look at other Ninja Trader scripts. And this is one of the things that I don't think that especially if you've never coded before, a lot of people don't realize, but once you've learned like what the major functions are, go and look at other indicators. Go and find an indicator that is really close to what you want, right? And you have lots of ideas, because the more that you program, the better that you can get at it, right? So you should have a bunch of things that are trivial and you don't necessarily think work, but you know, you would just want to know how to do that thing, right? So coloring a bar a certain color in NinjaTrader is very easy. There's a data series of the colors, and you just have to set the color for that bar to that color. And then all you got to do is on bar close, right? Or is it, yeah, on bar close. Sorry, that's not right. What is it? What would be an example of one that we've done with that? I think that we've done that with like inside bar. Sure. On bar update. Sorry, not on bar close. Okay, in on bar update, I come in and I try to see, okay, is the close less than the high of the previous bar? And then if that's true, I draw a rectangle, is what I do in that one. Right? I think that I have better ones. Oh, here you go. Okay, so there's a data series called Candle Outline Brushes. And you just set that bar to your color, for instance. Then when it draws a diamond on it, huh? I have better examples somewhere. Trying to think of what would be a better example. Oh, there you go. Bar brushes. There's candle outline brushes and there's bar brushes. And you just set it equal to the color. My goal is to draw boxes and fib retracements on the screen, but I am trying to start out flow. Well, okay, so what do you define as a fib tracement? Because that might be something really good already exists out there for you. So let me show you a website. I don't have any affiliation with this guy, but it's just like one of the best sites for NinjaTrader indicators, and it's dirt cheap. And you can download some for free. I don't know if it still does that, but you can download a lot of them for free. So lizardindicators.com, and then you can come into products. And I guess maybe you can't. Oh, get a free download from our indicator library today. You have to register. Okay, got it? Oh, that was just the what do you call it? The privacy agreement. Your insights are very much appreciated. Thank you for saying. Thanks. Hey, check you later. 12 likes. Hey guys, we're only 4 off from our goal. Thank you very much. We're doing better today. From the highest candle to the lowest, the lat past 250 candles. Okay, that's a little bit different. That's a little bit different. So lizard indicators, they got a bunch of Fibonacci bands, fibs from the current day, current month, current week, prior day, and months prior week. But doing it for the current day, doing it for the last 250 bars would actually probably be easier to do with just the chart tool, right? So let's pull up this chart that we put. Oh yeah, it looks like, I don't know. There's still some of these that are like dojis that I don't think should be. Look, if I refresh this, I think they're gonna expand. Yeah, it changes. So I don't like that. I think there might still be a problem with my thing. But anyways, so for instance, this one, we can do the draw tool, right? Drawing tools, Fibonacci retracements from here to here. Okay, I've kind of changed mine to be like 50%, but whatever. So there is a function that allows you to draw one of these from code, right? I believe there is, or there should be. So let's go find it. Looks like maybe they're now pushing a little bit further to where, I took my contract off because of the way it was behaving around that price. I am okay with them taking a little step further here. I could potentially get back in, right? I could try chasing here. They got a big order and everything. Okay. Ninja Trader 8 draw fib. Draw Fibonacci extensions. There you go. Oh, here it is right here. No. That's not what I want. Not the forum strategy. Ninja Trader 8. Ninja script reference. There we go. Draw Fibonacci retracements. Okay, here you go. So then it will tell you all of the properties that you pass into it. Ninja script base owner. So that's just this. Tag can be whatever you want. Is auto scale. Probably you want to say true. That will basically make it so that if you can't see the top and bottom of it, it will rescale the chart so that you can. And then you tell it which bar to start and price to start and the bar to end and the price to end. And there's a couple of different ways that you can do it, right? So that's all you got to do is you would just go in and say like on bar update. Take my and this you can save out to like this will return an object. So then you could just continually modify that object. At the end of on bar update, set the top and bottom to be the high and low of the last X bars. Easy peasy. Okay, now that they're pushing through here, let's kind of keep an eye on it here. I think that the reason that they're doing this is because the S&P 500 is sad. The S&P 500 looks very sad today again. You think they could be headed to 4250? I don't know. I didn't necessarily feel good about taking that trade off because I wanted to get it, the $20. But it did something there that I didn't like, right? It's actually, frankly, still doing something here I don't like. I kind of suspect that they could have a pullback again, but if I do get a pullback, I might want to buy it. Like if they come back to like this 08 area, right? I might want to buy it. But the other thing that concerns me is that I think a lot of the upside movement is being driven by, at least this most recent move up, I think is being driven by the S&P 500 not looking very good. So when it's equity correlation that's driving us, that can flip around on you really quickly, right? So I'm a little bit less sure about taking a trade. I'm a little bit less certain about it. But if I just come out on the day plus 15, that's fine, right? I'll just feel super FOMO-y when it goes like another 20 ticks, right? Actually, when you think about it, 2.75 is quite a ways back from what it was in the Treasury, isn't it? I don't know how far back that is, but I remember it being 2.7 back when it was like, oh man, this is too far, you know? Too far, too fast. Anyways, if you have trouble, hit me up on Discord. I'll help you figure it out. But I like to try, you know, I'm trying to teach you how to do it. So like I'm giving you just enough that you should be able to start, right? You should be able to get something that you can try to get work, and then there's going to be some misconception somewhere, right? And then we can fix that misconception. But it should be enough to get you started at least. Coming back there. Coming back there. Oh, okay. Doing it right now. Put this for owner. This is a keyword for the object that this code is contained in, so this would be the indicator. In fact, let me come back over here. Yeah, Control-Shift-1. Draw fib. Fibonacci. Retracements. And do you see here in their example code? This tag1 is just a string. True. These last four things are the only things that are really going to be different for you, right? You see what he's doing is he's saying actually that you could just rip that code straight out there. Except for instead of saying the low of 10, I would make it a property, right? Say period, comma, low of period, comma, 0, comma, high of period. Okay, so I'm starting to get a little suspicious. I feel like I'm getting too good at this, guys. I was sitting there, I was like, I don't want to buy that now because of X reason and Y reason. And sure enough, they came back down to the bottom of the range where the liquidity hole was in the 10-year, and the S&P 500 flipped around. So Now, if we really thought that it was going to continue to go higher, I think that we could buy it. But given that 09 is kind of a key volume profile area and it does appear to be reacting to it, I think that I would need to have a very good reason to buy into it to do it. Like maybe some news. We do get some news at the top of the hour. We get consumer confidence. Oh, that's another good reason to like not want to take a trade, right? Oh, well, you got to create a property. Here, let me show you. Oops, that's not what I wanted. Oops, I opened up the strategy analyzer instead of a new Ninja script window. Ooh, okay. Treasury just slammed back up there. Oh, you know what it was is that the S&P 500 was starting to look positive and then they got slammed back down. So it's still equity correlation. You can trade the equity correlation, but I always get burned when I do that. Let's just do a strategy because those are a lot easier to. Did I tell you guys that strategy that we were writing the other day was I back tested it over a very, very long time period and it actually still worked okay. Oh, that's right. It was order flow VWAP. VWAP touch. There you go. This one. I'll show you guys the results in a second, but we did this like before Easter, I think it was. I know we just kind of forgot about it, but it over the 2 years it was okay. It wasn't the greatest strategy, but it was okay. Oh, I don't have it down. I don't have period in this one, but basically Ninja script property, what this tag does is it makes it so that when you're in the adding the indicator, it shows up as one of the properties for you to be able to modify, right? And then this snippet right here is a C# thing. So public, the accessibility of it, double, the type of the variable, and then threshold is what we're calling it. So it's a variable called threshold of type double. And then you just do this little part right here, get set. It just kind of creates getters and setters. And what it's actually doing underneath is it's creating a private variable and then a method that says, set threshold and retrieve threshold is what it's really doing underneath, right? So you could do Ninja script property public int period, right? And then you'll be able to use period, and it will show up as a property in your script that you can change. Not an int array, just an int. It'll just be. I'm sure that almost any of these other ones will have it. There you go. Just like that. Public int period. Selling isn't over, but they could easily margin call late shorts here, says Peter. I don't know. I'm a little suspicious about how negative the S&P 500 has been. Can I inherit it from a class? If you had a class that already had period in it, if the class that you were inheriting from already had period in it, then yeah, that would work. But generally speaking, you don't want to do inheritance with indicators. It's a very, very narrow set of situations where you would want to do that because of the way that sharing Ninja script works. When you start to do that sort of stuff, it just makes it a little bit more difficult to share it, so people usually don't. The one exception to that is my I have an indicator to draw a profile. Now just do just this piece of code right here. You just want to add that piece of code exactly to the bottom of your script. And now they're heading back into the '07. Is that because the ES was maybe trying to dig its way out? I don't know. When I look at this 6J, you know, the movement in the 6J is a little has a little bit more noise in it than the Treasury, but it also looks much more set for a trend up. There has got to be some major short covering in the Japanese yen, huh? I think interestingly enough though, they haven't been able to trade below '07. I'm thinking about it, you know, part when the winner that we caught, part of what did that for us was that huge order, right? So seeing that huge order and then having a push up and then having another little slightly extension of the range beyond that, that's pretty good. There is a possibility that that was like the best action that we get of the day, right? Probably the market is holding back a lot because of the consumer sentiment number that's about to come out, though. What is it? What are we expecting? CB, sorry, consumer confidence. CB consumer confidence. We're looking for a reading of 108.2. Richmond Fed Composite Index. We're looking for a reading of 9 versus a previous reading of 13. Also get new home sales, looking for negative spot 6 versus previous month of negative 2. Oh, we have a 2-year no auction today. I didn't realize that. Hmm. Well, I don't have a 2-year up, but there's not that much activity in this 2 years, so. Oh, Jesus. So yesterday, yesterday, Sean Hannity said that Joe Biden is taking orders from the Easter Bunny. And I said, well, if he was taking orders from the Easter Bunny, I would think we'd be doing pretty good, actually. A lot of people liked that. And one person responded back to me, the Easter Bunny is fictional, actually. I thought it was a funny joke. You squeezed all your kid from the 2 years, and now you're short MES. I always feel bad kind of jumping on the ES when it's doing this, you know? Plus, anytime that I'm like, well, it's going down, I guess I should just keep selling it with everybody else. It usually doesn't work out for me. I'm usually too late. Okay, so Richmond Fed number was better than expected. Still waiting for that consumer confidence number. Treasury is getting slammed down off of that. Sure, I'm glad we didn't take another trade, huh? Well, you gotta know that news is coming, right? Okay. 107 spot 3 versus expected 108 spot 2. Oh, that's interesting. New home sales -8 spot 6 versus an expected spot 6. So that is a really huge change in new home sales. But I'm not sure why all of that data would cause the treasuries to sell. Is it just because the Richmond Fed Composite Index was higher than expected? That seems like that shouldn't be quite such a big deal. And I forget exactly what the details about this is. Level of a composite index based on surveyed manufacturers in Richmond. So manufacturing activity being good. There must be more detail in it. Let's go to the latest release. 5th District manufacturing activity continued its expansion in April, according to the most recent survey from the Federal Reserve Bank of Richmond. The composite manufacturing index stood at 14 in April compared to 13 in March. Shipments increased from 17 to 17 from 9, while the volume of new orders moved down slightly from 6 to 10. Despite expansionary activity, firms remain pessimistic about current business conditions. Additionally, survey participants expect business conditions to deteriorate in the next 6 months, which is the third time in history of the survey that this expectations index has been negative. Order backlogs continue to increase in April while vendor lead times remain high. Firms expect vendor lead times to continue increasing in the next 6 months. That's not good for inflation. The index for finished goods and raw materials inventories remained low, and firms expected that to persist for the foreseeable future. Manufacturers continued to report growth in employment while experiencing challenges finding workers with the necessary skills. Wage index increased to 41 in April from 37, and firms don't expect the increase in wages to let up. The average growth rate of prices paid increased slightly in April, while the growth rate of prices received from customers edged down slightly. Firms expect growth rates for both prices paid and prices received to decrease somewhat in the next 12 months. So I see a little bit in that report that is maybe concerning for inflation, but nothing like super significant. And I am a little bit surprised that the treasuries are turning around and turning short like that. Now, with the way that this is behaved, let's just remember, number one, that there is going to be a liquidity hole left behind up through all of this. So you have to be careful. There is a possibility we get sucked back up, but surely there's going to be a bunch of people trying to puke this and go the other way. You're trading Ethereum? Oh yeah, it does. It looks like Bitcoin's going across the 40K again, but that looks like, again, Bitcoin is more correlated to the S&P 500 than anything else, and it just seems like the correlations are just getting stronger and stronger and stronger. Sean King left Twitter? Oh no. What will we do without Sean King? Jack Pro CBX calls it receipts. Oh man, dude, that one you might not know who. So Sean King is like a Black Lives Matters activist that pretends to be black, but he's not actually black. Or I don't know. I don't know. I don't remember the full story. That's why he's kind of controversial in that respect. Some people say that he's not black. Let's put it that way. Okay. Some people say, I'm not saying that he's not black. Some people say that he's not black. And very, very vocal, far left, pro censorship advocate out there left Twitter. Probably the first of many. Probably the first of many. Better to sell the micro Bitcoin. There's more volume on it. Yeah, but you still got like, I don't know, man. The risk that you're taking on with that is still pretty woo. Woo. I'm not watching the news. I'm watching Twitter. Watching Twitter. That's worse, isn't it? Okay, we're down at the lows now. I don't know. So what can so this is where I think that trading gets really, really hard. Because guys, markets are not informationally efficient. So if markets are not informationally efficient and the treasuries just moved down, why did the treasuries move down? Was it because there was something in that index in the fundamentals that suggests that we could move down? Is it in line with the fundamentals? Or is it just a random move? I can't be sure. Since I'm not sure why, what would be in there that would be pushing them, I, in this instance, can't know. Maybe you do. Maybe you know something about that report. You read that report too, and there was something that you picked out that I didn't that is really important to the fundamentals here. I don't know. But that was a pretty good down move. Let's see if we can pull up Zero Hedge here. What they've got on their headlines today. Bull market in bonds set to return with a vengeance. Well, I want to read that one. Equities erase yesterday's gains. Bond yields tumble. Except for that, then they just all came back. Well, there's still only 2.76, so that's okay. Hey, you know what? 2.76, that's fine. Home prices lows at fastest, so they haven't gotten us anything written for the other stuff. There was the core durable goods and everything. Internet searches for delete Twitter soar as blue check lips melt down over Musk deal. Oh boy. Will it tell us all of the people that are, oh yeah, the search trends for delete Twitter is like was sky high. Oh, look at that. Yeah. Man, Laughed Hawaii, you're just trading everything today, huh? Anything that's showing some momentum, huh? Well, you can at least in this current market, you can get away with that sort of thing, huh? We ever go back into like a true QE market? I want to do that. You just find what the commodity is for that day and you just write it the whole day. And you think that they're going to touch 120 even again? We also see establishment media melting down, publishing articles on how to delete your Twitter account from CNET, Newsweek, The Independent, CNET. Wow. That seems awfully, well, I don't know. That's got to be the clickbait article that you would publish to get the attention, wouldn't it? Musk has described himself as a free speech absolutist, and perhaps under his leadership, Twitter will get out of the business of censoring anyone who challenges or has a different opinion than the liberal establishment. Yeah, we'll see. I think that there will be challenges along the way, but I think that he's trying to do a good thing. How can markets be informationally inefficient? Isn't a futures market the combined outlook of all participants based on the summation of all known information? Well, that's the claim, but the empirical evidence doesn't suggest that assertion. Hold on, News Clock is saying something. Some more Russia stuff. Okay, so the key thing that screws this all up, Abysmal Whip. By the way, welcome. I haven't seen that name before. Or no, you've been here before, but new today. Hey, orders have a very dramatic impact on price. Markets are very inelastic. And they're actually getting more inelastic because the thing is that like index funds, they are very price insensitive. They don't care what the price of the S&P 500 is. They don't care that they're getting a good price. Their whole thing is that they've gotten contributions from their customers and they put that money to work buying all of the constituents of the index, and that's all there is to it, right? They don't care what the price is. And their orders have a dramatic effect on the market and can move the market very far away from what fundamental value is, right? So here you get this thing, like this piece of news that we got here, okay? A lot of treasury contracts traded it. So the reason that the treasuries have fallen essentially 17 ticks is because of the orders that hit into it. Enough orders hit into it, and the liquidity conditions were as such that it moved 16 ticks. If there were more orders out there to sell, it maybe could have gone further. If there was less orders out there to sell, it probably wouldn't have gone as far. And so we think that it should be like the market participants do their calculations, and based on that news, they figure out what the new fundamental price should be. But the reality is that they just look at it and they say, is that good or bad? And then they buy or sell based off of that. And the number of people that decide to do that determines how far it goes. And so it is the case, and this is a very, very well established empirical fact, that the strong moves, are almost never equal to what the fundamentals suggest. They always go further or not as far as they should, right? So the market is trying to sum all known information. I mean, that's why it's kind of an effective way of doing business, right? But there are structural things about the way that the market works that prevents it from doing that 100%, right? And the discrepancies can be quite wide, right? So that makes some analysis a little bit more difficult, right? Because the technical analyst would say, news came out and it moved down, that must mean it's bad, right? But we just got to remember that it's more complicated than that. Maybe we moved down because people had a bunch of longs on. Like maybe they were all long expecting the news to be something, and maybe the news was what they wanted it to be, and they're just unwinding their positions, and that could make it go the wrong way, right? Because it's the orders that make it move, not necessarily, And what's driving the orders? Past positioning is one thing that could be driving it. They could be moving based off of something completely different that we don't know about, right? So when we get a piece of news comes out and we understand it, and I'm like, oh, I want to go short, and then the market goes down, then I think that's easy. I think we can say, okay, this is what caused this is what caused this, right? But when the market is doing something that I don't expect, I don't just automatically assume that the market is correct. If you do that, I think that what you will find yourself doing a lot of the time is FOMOing into a move that reverses on you really quickly, right? That's what it's going to tend to do. That's what we're trying to avoid. So we only want to take a trade if we know something that has a high probability of predicting future orders. And then we want to factor in the current liquidity conditions along with that to try and find an optimal entry. That's what we're trying to do. So since I didn't see anything too significant in that Richmond Fed, that just means I don't have a trade, right? And we can't completely explain what the market's doing. Usually at the end of the day, and when you're reading all the news, and if you're reading the right news sources, you'll usually be able to get a pretty good idea of why it moved the way that it did. But right now, I don't necessarily know. And I just don't want to make the mistake of assuming that it was because of that. And hey, look, I mean, this is retracing quite a bit. It wouldn't surprise me in the least bit for them to come back up to '07, if not go at highs. It's possible, especially since the liquidity behind them is going to be a little bit weak. It should be easier for them to move back up. There'd have to be there definitely have to be a large meta order executing over the day to buy for that to happen, though. Awesome stuff. I like that. No, but you're asking the right. You're asking the question. Like that's the thing. This is the deepest question about markets. What is the nature of market efficiency? That is like the biggest unknown. The biggest. This is really what is at the heart of all trading strategies. Is they're based on some sort of belief about market efficiency, right? Warren Buffett, for instance, his whole thing is that the market is not very efficient at factoring in the fundamental value, that there are companies out there that are very deeply undervalued. That's how Warren Buffett made his money. What is this platform? I am using Jigsaw Day Trader is what these DOMs are to see all of the level 2 data. And then for the charts, I'm using NinjaTrader 8. And most of the stuff that you see here on NinjaTrader 8 are indicators that I wrote myself. And you can download those and use them on speculatorseth.com. $100 for a full license, but you get a 2-week trial. And it gives you all of these things like spreads and so forth. Forbes 10 things I wish I knew when I started Elden Ring. I can't believe that Forbes is writing an article about Elden Ring. I'm surprised. Very, very surprised. Spot on, Seth, but that wait is a pain. Yeah. Couldn't get it to compile, but now I start with a fresh generate on strategy builder and it still won't compile. Have you ever seen that? Yeah, I don't use the strategy builder. I used it like once and I did not like the code that it generated. Well, I was spot on about how that was going to trade, right? I should have taken that trade, but I didn't take the trade. Why? Because I knew what the liquidity could do to it, but since I didn't know what was triggering those orders, I didn't take a trade. Yeah, you know what? With the way that I trade, I find myself saying that a lot. Like, oh, I told where it was going to go exactly, but I didn't take a trade. But you know what? We're in a certain market where that happens a lot. In other markets, if I was so cavalier, I would lose money. So I think that I need to continue to be really strict with myself. So we've been doing so well. We've been doing so well. We're on a really good winning streak. Okay, let's program Michael's indicator, shall we? What's the error that it gave you? New indicator. Fib retracement generate. Okay, so let's add the property first. Just script property public int period get set. Okay, and then on bar update. Do we still have? No, we don't. Of course not. Ninja script reference. Dom, it's Jigsaw Day Trader. If you look in the video description, I have an affiliate link for Jigsaw. I should always mention that when I say Jigsaw. Well, you know what I always do, but I almost forgot that time. I have an affiliate link for Jigsaw, so you get $100 off of the purchase of a new license for Jigsaw. Also note that if you want to trade live in Jigsaw, there is a monthly $50 license fee that you pay. But if you're going to trade sim, you don't pay that. Okay. And anyways, the channel gets a commission if you purchase it through the link. Oh, what was the first error? Sometimes if you copy and paste it and it thinks that it's a link or something, it won't show it to me because I don't see anything. Well, let me just do it this way. Anyways, so you can find the link in the video description. Also, if you go to the main channel page, there is a video that's like, what's the best day futures trading platform? And I talk about what I like about it and everything. So there's that too. Fib. Draw fib retracement. So I'm gonna do it like this. I'm gonna make mine a little. Well, actually, no. We could do it this way. No, you don't want it to draw one every bar. Fibonacci retracements. Okay, so we're just gonna say Fibonacci retracements my fib. If my fib equals null, and I'm going to draw it. And these are going to be changed to period, low of period, and high of period. Also, I know there's going to be all these problems. There's just going to be all these things and you're like, oh, you didn't mention that. You didn't mention that. Okay, well, this is a good example. Maybe we need to talk about those things. If current bar is less than period, return. So we won't do anything. If my fib equals null, then my fib equals Fibonacci retracements, right? Or we could say if else I think I can say fib my fib dot, is it anchors? I think it's anchors. I've done this before, but I don't remember what you do with it. Trying. Oh, actually, if we come back over to this chart, yes. Properties, start time, end time. Oh, yeah, that's maybe what we want to use. Yes, my fib dot start. Okay. Start anchor dot bars on bars ago equals period. My fib dot start anchor dot wam price. There we go. Equals the low of period. My fib dot end anchor dot bars go equals 0. My fib dot end anchor dot price equals a high of period. Oh, I didn't need that. Try compiling that. That's probably going to complain. CS 1513 missing bracket. Yeah, when you double click on the error, does it take you to a different file? Might do that. So I'm trying to do something a little bit more complicated than probably what you were doing, but let's work with it. Let's put it on this chart here. We'll delete this. Compiled on the first try. What? Okay, period. Let's make the period be the last 30 minutes. Okay. Okay. Did not work. Oh, no, I hate it when it does that sort of a thing. Yeah, when you compile it, runs through everything. Yeah, you can actually exclude them from running. By the way, did you know? Okay, so that's interesting. Let's try debugging it. I might the stream might lag a little bit here. Oh, we don't want to show that. That's not what we want. We want fib retracement. Okay. Debug attached to process. Well, they came right back to 07 there. See, if you were a technical analysis trader, right? You would have taken that, you would have said, that's some real trend. I'm going to run with that, right? And then maybe it didn't get to your target and it snapped back on you and you stopped out and you said, well, it's just random. And what did we do? We were able to anticipate that it was going to do that and that it might not be worth messing with, right? Not going to be perfect every time, but I'm not saying that that's proof that it's effective. Okay, I'm just trying to kind of give you an idea of what kind of advantages can being able to read the order flow and understanding that the market is not informationally efficient can give you, right? What the heck? Oh, it actually did it. So it is doing it. It actually is doing it. Which suggests that it might be on here, but it's just like, okay, wait, hold on. We gotta come in here to the data series. We don't need so much data. Just one day. If we go to the start, we might see it. Yeah. Oh, but it is going to the right spot, actually. The price is, so it seems to me that bars to go is the wrong property to use. I'll just minimize that in case we need it. Hmm. You aren't saying today's move was caused, I mean, it might have been consumer confidence too, but it was like mostly in line. It wasn't like the consumer confidence number was good. I don't know. Yeah, let's pull this up. We need to change this bit right here, this start anchor bit. Because it's the end anchor isn't going to 0, for instance. Actually, let's come back and look at this. Start time, end time. Hmm. Move anchor price. Oh. Oh, actually, we don't have to do that. I'm so stupid. Because the tag handles this. My fib retracement. Because it's the same thing, it should be okay. Okay. I mean, I was doing something too complicated. You know what? This isn't the first time I've done this before either. I was like going through, yeah. You're not telling me the first one that's, well, I think that I'm behind the curve on it, really. The reality is I'm behind the curve on it. There you go. Now it does it. So for that, that's not the high. Oh, no. We don't want the low of period. We want min and max is what we want. Think. Fingers crossed. No, what is the okay, listen. There's an indicator for it. I'll find it. Min. My fib retracement. Oh, you know what? I'm just storing it to a variable. You don't have to do that. They're saying you don't have to do that. They don't want you to have to track. They don't want you to have to track the object. When you run this method, it returns an object back to you. It's not min max. I swear there's an indicator that is what is the high and low of the last X bars. Max. Yeah, why is it not showing me max? Min. Is it like that? We're not backtesting anything. Wow, they are right back up to the highs. It doesn't like that either. Maximum. There we go. Max. Period. Oh. I was close. I was close. Usually you have to look it up in the documentation. Okay. Da, 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 da. There you go. I don't know why people think that's useful, but put it here in downloads. Uploaded file. We could have made a good 20 bucks off of that whole thing, couldn't we? Yeah. Enter. And then if you're on the Discord, you should be able to find it here at this link. So the 30-year went higher there too. That's interesting. Well, I don't think that I can get on board with this one because, we did expect it to come back to '07, but I did not expect it to come and bust those highs so quickly and aggressively. That's really something else. Maybe that suggests, though, that we had a really good trade to begin with, and that if it wasn't for that news, we would have been able to just stay in it, and it would have gone a lot further, right? Because that coming down, it was really helpful for whoever's having to buy it here. But it also looks like they're buying it because the S&P 500 is just getting creamed again. Like, they look like they're headed for 4,200. I think that may be part of why the 10-year is doing what it is. Shakeout day, yeah, I don't know. Like, the thing though is that yesterday was, it was an update, but it wasn't a very much of an update, right? Yeah. Yeah. I kind of, you know what? I need to just chill. The reason I've been doing as well as I have is because I've been really chill and selective, right? When I see action like this, I want to get involved so badly, but I really don't have anything that I can use other than just trying to go with the momentum and hoping that it continues, right? And how big of a difference in cumulative delta is this all? Well, from here it's 56 to 67. So that's about 10K. And this move was about 10K. So they're already like 20. If somebody's buying, they're already like 20K contracts long. Although we may have to, it may suggest that it's not just a large meta order. It could be trading activity being triggered by the S&P 500 doing so poorly. By the way, our goal was to get 16 likes today, and we totally hit it. Thank you guys so much. We did good work today. I know that the programming there was probably boring for some of you, but we did get an indicator written for somebody, and we took a good trade, and we made a bunch of really good calls on some trades that we didn't take. So I should feel pretty good. And you know what? Just in general, I'm feeling really well. I was without my multivitamin for a while, and I tell you what, I don't sleep as well without the multivitamin. Nope. So let's come back to Zero Hedge and see. Whirlpool cuts of guidance warns shortages to persist for entire year. So now we're getting some suggestion that some of the company earnings could be affecting the stock market. Consumer confidence disappoints in April after March's hope crash. I didn't really get anything about that Richmond Fed one. Well, let's read what they said about the consumer confidence. After hope crashed in March, analysts expected a modest rebound, but they were wrong. The headline confidence print dropped very modestly as expectations limped higher and present situation worsened slightly. Notably, the strongest gains in confidence were among the higher income households. The labor market actually tightened modestly, with jobs easy to find falling relative to hard to get. We suspect this will get significantly worse as the Fed starts hiking rates. On the bright side, inflation expectations fell in April. Well done, Jay. Yeah, okay. That was zero hedge. Hmm. Well, the Treasury is coming back there. Yeah. I don't like this. So something that I have a lot of PTSD over is situations where the Treasury doesn't seem to have any super strong fundamental driver, and they are mostly following along with the S&P 500. And I'm seeing that when the S&P 500 gets an up bar, the Treasuries turn around really hard. I don't like that at all. So there's also some of the liquidity on the inside is kind of weakened, which is another thing I don't like. Bitcoin is it hasn't fallen too far from when we were initially identified it, but it could be not done. Like if Bitcoin falls and makes a lower low compared to yesterday, could Bitcoin finally turn south and go and turn sour? Mr. Topstep, funny how one day can change sentiment so much and make investors feel like the rally is about to start. Yesterday was one of those days, and the OPI said, "My new philosophy is to maintain a bearish view of the markets and not let rallies give false hope." Dude, it's well, they haven't touched 4,200 yet. At the moment, the S&P 500 looks like they may recover. They may recover. Hmm. So remember that '09 was like the higher end of this range, right? But last time we were at '09 and we took our exit on that original trade, it was 2.47, right? So the 30-year really went higher. And that did indeed flatten the curve. So that's what we're getting here is some flattening. Oh, that was what from a while ago. I was checking my Twitter notifications. I gotta get into the mode of being like, okay, what am I gonna post on Twitter today to get me more followers on Twitter? Like I do with TikTok. On TikTok every day, it's like, well, I gotta post something every day. We've been doing really well on TikTok, by the way, guys. Either volatility has calmed down or there's something wrong with my feed as it usually happens. Well, at the moment, we're sitting at 09. It does look like after that initial move from the Richmond, from the consumer confidence and everything, that the market has come back to the area that they were kind of having liquidity problems at before and is ranging around in that location again. So my guess is build a little bit more volume around 10 and then another push up later. One thing that we're gonna have to keep an eye on now, like the next big event is at 9:30 is when the London session closes, and you will often see a change in behavior out at that point. But the thing that we have been seeing recently is that the bearishness is coming more from Europe than it is from the United States, right? Like remember yesterday, we were bearish for most of the morning, and then after the European session closed, the markets moved up. Although, of course, the real market watchers understand that the reason that the markets went up was because what's his bucket said that we're going to go down. What is his name? It's not funny when I can't remember their name. Ugh. Yeah, I close shop in 8 minutes, but 30 minutes. For those of you that are still going to go around. After the London close, like there tends to be less opportunities in treasuries, but this might continue to churn all day, right? Yeah. How long have you been here for, Lucas? Did you catch my one? I caught the original trade. Like I did this, or was it? I got in somewhere around here, and I got out on this one right here, actually. So I escaped that. It wasn't in for the news. And then this happened. This happened, and I was like, well, I don't know why this happened, but let's just realize that because of the liquidity, there's a good chance that this whole thing retraces. And guess what? That's exactly what it did. And then it turns out that there was a large meta order buy going the other way. And you know what? Given that, if we continue to see that meta order, then I would expect us to turn back up and do that. Because it's just what they're just doing a pullback because the book has gotten strained. But the big wrench in that whole thing, because otherwise I would be buying it right now, right? The big wrench in all of that is that we think the reason that we're seeing this upward pressure is because the S&P 500 is just absolutely dismal right now. Oh, really? Haven't rolled over last month after consistently losing in CBN and TN. Well, you know what? I was doing really terrible there in March. You remember I had that time period where it was like I lost like 12 in a row or whatever, and I was like super bummed about it. And I was like, I should just quit. And then ever since then, it's like I can't lose. I went and looked back at my stats, and I was like 50% win rate, and I was like, oh, I'm actually surprised that it's 50%. It might actually be higher now, because I haven't been taking very many trades. I'll just take like one trade and make 10 to 20 bucks and then be done. So, but I think taking time off now is a good time, like especially if you're trading ZN and TN, like it's just too volatile. I say just switch over to micros. Switch over to micros until they chill out, if they ever chill out. I don't know. The volatility that we're seeing in treasuries could be with us for some time, couldn't it? Man, that Ethereum is not slowing down. Down 3.78%. Where's Bitcoin? Bitcoin is down. No, it shifted on me. Where did it go? Bitcoin is down 2.41%. Oh, I'm glad I don't have anything in Bitcoin, but I'm pretty sure that my larger portfolio is killing right now. It's probably below 6K. Oh, that's sad. It's okay. Someday we'll hit 7K. We just gonna have to be patient. It might take a few years. I might underperform the market, but it will happen. I felt like there was something else I wanted to say, but I don't remember what it was. Dum, 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 dum. Anyways, why not do micros, Lucas? Just you just got to be careful about. Don't trade it when the spread's too big. Like this in the 5-year. Don't trade that unless you know what it should be. We would make a market. I have something that will actually tell you based on the 5-year what the correct interest rate should be. So you could go and say, what is the right price, and then only be a buyer or only be a seller based on your sentiment for the day. When I apply the script to the chart, nothing shows up. Okay, so it should show up, yes. Did I? Oh, geez, I don't. You're probably getting the thing that I had where the indicator is there, but it's not where it's supposed to be. Possibly, like if you scroll all the way to the front of your chart, do you see it? That's your first one. That's the first thing I would check. The second thing I would check is if you go to the control center. Guys, if you use Ninja Trader, you got to know about this, okay? New Ninja script output window. If you have the full version of Ninja Trader, you get this Ninja script output window. And then if there's errors, if there's something wrong with the indicator that doesn't just like outright crash it, they will show up in here. Either you're right or wrong. Trading micros when being wrong only accomplishes losing less money. Rather fix what's wrong and get paid properly. Well, but I don't know. Like my approach to it is, well, remember the way that we trade is we look for predictors of order flow and we have a general overall bias, and then we utilize what we're seeing in the order flow to optimize our entries and so forth. So if we're doing poorly in that situation, then the reason for that is probably that we don't understand that market very well, right? So in that instance, yeah, you don't want to put risk on, right? So you can trade micros and try and trade through it, or you can trade sim for a little bit until you get back into a market that you seem to understand well, right? But I can only say it that way because I have confidence in all of the things that I'm utilizing to make my trading decisions, because there's research backing them all, right? Even though I can't do a strict back test that all of this stuff in combination has a really good expect. All I can do is go off of my performance in that case, right? But that's the nature of discretionary trading. I don't know. You know what? The worst thing that can happen to you as a trader. Oh, well, okay. Go to output, then go to the chart and refresh the chart and see if anything comes out in the output. Sorry. The worst thing that can happen to you as a trader is start trading and be successful right away. The worst thing that can happen to you as a trader, right? Because what will happen is you think it works and you'll do well for a while. Then when you fail, instead of going, oh, this doesn't work, I should go back to the drawing board, you say, well, it worked for a while, so I just need to, and you'll just cling to that one way of doing things over and over and over again. Yeah. Worst thing that can happen to you is be successful right away. I'd rather be the person that fails and fails and fails and fails and fails until, so that by the time you do find things that do have edge, you're absolutely certain that there's actually edge to them, or at least that they're real market behaviors. What I've got is, I wouldn't call them edges. I would say I have proven market behaviors. Does trading those proven market behaviors have an edge? Theoretically, but we can't prove that. Right? People keep liking this this tweet that I made where I said I think we'd be doing pretty good if Biden was actually taking orders from the Easter Bunny. It feels good that when people like your tweets, but they don't follow. Why you don't follow me? Hey, I gotta get going, guys. I've gone like way too far. I will see you tomorrow. In the meantime, stay profitable, friends. Stick with it, Lucas. You're really good at this, so you'll get over it. Eventually, you'll figure it out. Michael, you send me a message on Discord. If you're not on Discord, there's a link in the video description, and I can continue to try and help you. Anyways, stay profitable, friends.